Hello everyone, and welcome back to the channel 5 to 9 Real Estate. I'm your host, Rebecca Young. For those of you who are new to the channel, basically we are a group of 9 to 5 professionals that all have very demanding and busy schedules, but we still find the time to invest in our 5 to 9s. If this is the kind of content that you'd like to see, would really appreciate if you give us a follow, if you subscribe to the channel, if you push the little notifications bell. And especially if you like our content, please tell us by liking the videos, leaving comments below as well. Today's topic is going to be basically how to prepare for getting a mortgage. So I'm going to cover off basically what your mortgage broker will be looking for, the kinds of documents that you'll need to provide for proof, and also just especially for the first timers or people that are still early in the investing game, just so you know that this is normal, because sometimes it feels like they're going to ask to take blood next. And it's getting more complicated as the years go on. So I thought I would just do a video to let you know kind of what's normal. If you're looking for a great mortgage broker, we have a great team of professionals that we work with. The best way to get in touch with us is to go to our website 5to9.ca, and if you complete the contact form and just let me know what you're looking for, then I can put you in touch with a mortgage broker that's the best suited based on your needs. Without further ado, I'd like to hop into the video today. As an added bonus, I'm going to be bringing you into a calculator that you can find online to kind of help get you started so you know what to expect before calling your mortgage broker. I do find that there are differences. I find that online it's just very conservative so that you're not disappointed when you go to the professionals, but just to give you kind of a starting point. So with that, basically when you are getting a mortgage, and I always recommend get a pre-approval. Some people reach out to me and they say, oh, I'm good, I don't have a pre-approval, but I'm good to start looking at real estate. You are setting yourself up for failure right from the start. You need to have the pre-approval because it's not even just to know what you can afford, but because the process takes a little bit longer now. It's really so that you have the opportunity that if you have a mortgage condition when you offer on a place, that your mortgage broker can actually finalize everything for you in those 5 days. If you don't have a pre-approval, you're going to be scrambling and it's not going to get done in time, and that's going to end up in disappointment for you. So number one, always get a pre-approval. Number two, basically what I'm going to use number two as the overview for what to expect. Basically, it boils down to 3 things. So the first one being your income, then the amount of debt and how it affects you on a monthly basis, and then your credit as well, your ability to be able to pay back your debts. And I've also found that as you continue to grow your real estate portfolio, sometimes it makes lenders more comfortable to see what kind of liquid assets you have on hand as well, just in case there is any economic uncertainty. And when you're mostly investing in real estate, they are illiquid assets. So making sure that you have other ways to cover your bases just in case. So we can start off with income. This is where it's going to feel maybe a little bit invasive if it's either the first time or if you're still a fairly new investor. Basically everything you can think of so that the banks and the lenders can prove that you have the income that you say you do. So that involves notice of assessments, that involves T4s, that involves T1 generals if you have self-employment income, or if you have real estate, if you have rental properties, that's often captured there as well. Letters of employment, even recent pay stubs, even confirmation in your bank statements as well. It's a big list. So these are just examples of things that I've been asked for. Another big thing for you to be aware of is that the banks will look for bank statements to not only confirm your income, but also confirm where your deposit for a property is coming from and where your down payment is coming from. Often they will ask for between 60 to 90 days of bank statements. So I always recommend having that in a clean account so the banks can easily see where this money is coming from. If it's in savings, that's probably the best and the least hassle for banks being comfortable with that check mark. If you have, an RSP that you're drawing from to purchase your first home, for example, they want confirmation where those transfers in are coming from, especially if they're large amounts. One thing to be mindful of is if you do have funds coming in from, let's say your family is helping you with part of the down payment, they either need to give you a gift letter to show that it's not a loan and that it's not going to therefore impact your income ratios. If there are funds coming in from, for people that have parents or family that live outside of Canada, that gets a little tricky. honestly, the best thing for you would be just to transfer the funds into your account as soon as possible and just hold it in your Canadian account for 60 to 90 days, and preferably 90 days, just so you don't have any hiccups with that. Because the problem is that ultimately, with the increasing technology that we have, it seems that anti-money laundering policies are becoming more strict. They really want to confirm that the funds are coming from legit sources and that we can track them. And also just for the proof, right, that you're not borrowing from someone else and taking on more debt to be able to put into this property for a down payment. So it's kind of a, two-purpose piece, but it's very important. So again, the easiest is always just to work with a mortgage broker from the get-go and let them know what you're working with, and they can best advise you. On top of that, it's also important to note that you need to have confirmation that the funds are coming from an account that you own for the same reasons as I just mentioned. If you already have rental properties, the banks also want to see lease agreements and proof of rent deposit. It's pretty involved now, right? But it's really just, in a way, I'm glad that these systems are put in place, because then it means that we have more stability in our mortgage system overall, and that we're not going to see the same flaws back in, the mortgage crisis in the States. In terms of your expenses, basically, again, just proof of your expenses, so that when ultimately how you qualify is that they're going to be looking for your income ratios and seeing how much more debt you can take on in the form of a mortgage payment. So really, it's just, they look at your income, they look at your debt levels, and then they just want the confirmation of those numbers to make sure that it's in fact the case, so that they have the proper calculation when they're giving you more money. So in terms of your expenses, it really comes down to, your mortgage statements, if you already have other properties, any debt statements. So if you're not paying off your credit card, for example, or like a line of credit or student debt, that they have proof of what the balance is, and more importantly for them, what you're paying on a monthly basis. And then also any property tax statements for your properties as well. So that's kind of more for your pre-approval. And that you can see why it's important to get all those documents up front, because, God forbid you start the process and then the banks are coming back and saying, oh, we need all this other list of documents, and that could take you a couple days to get everything. So again, very important. Number one, get a pre-approval. So on top of that, once you get your pre-approval and you found this dream property and you place an offer and you have a conditional period, at that point, there's a couple things that are specific to the property that the banks are going to be looking for. So it's often the case that they look for an appraisal during that period. It depends on the situation. If you are concerned about it appraising, I would recommend making sure it gets done in that period. There's a bit of a risk there right now, because a lot of lenders can't actually get the appraisals done in that time period. So me as a realtor, when I'm helping people, what I do like a kind of like a light appraisal to make sure that we're definitely paying market rate, or ideally under, because I would never want my client to be in the position where basically if your appraisal doesn't appraise, if your property doesn't appraise, then that money that difference has to come out of your pocket, and nobody wants that shock. So just be mindful of that piece. It's, again, talk to your mortgage broker, talk to your realtor, find out how they're protecting you to make sure that you're not in that position. A couple other things that the banks will be looking for is the sold listing of the MLS to again confirm, the purchase price. They will also very likely look for proof of your home insurance. So often a condition of getting your financing is to make sure that you do have home insurance on the property. It's not necessarily content insurance. It's not life insurance as a part of the mortgage. It's specific to the property itself, and making sure that you're covered from a structural basis, the roof basis, any water damage, that you have replacement value of the home itself, just in case anything happens and you need to leverage that insurance to rebuild. That's very important. So often you can call your bank. A lot of banks actually offer that, and that's great because they already have your profile and they can give you, special rates based on that. Or honestly, working with a broker as well, because they basically shop around for you. And I would actually lean that way, because if there's ever an issue where you do have a problem, I'm the kind of person that I would so much rather just have professionals dealing with stuff for me. So I would so much rather that if there's a problem and I have an insurance claim, I don't want to mess around with my insurer that if it's covered or not covered. I would rather just call someone who's kind of my account representative, and they're going to deal with that for me, because frankly, I feel like my time's more valuable and better spent doing other things like working or helping clients or investing in my own real estate. So that's my own advice, but obviously, do your research and figure out what's best for you. The other thing they're going to look for is the proof of your deposit. So when you purchase real estate, it's very common that you put a minimum of 5% down. more so in Toronto and the Golden Horseshoe area. I know if you get a little further out, it's not quite that much yet. But the point being is that the banks also want to see where that deposit is coming from. So again, if you have a family member or if you have, a partner helping you with deposit, make sure that you have proof of that and that you can show where, the money's coming from, which account. Ideally, if you're the one getting approved for the financing, you ideally want to have that money in your account and then use that for the deposit just to make sure everything's very clean. On top of that, when you're at the stage where you want to start leveraging corporations to buy real estate, just a little tidbit that they're also going to look for the articles of incorporation to make sure that everything is, on the up and up, basically. A couple of additional things that I've been asked for in the past and that you should expect to be asked as well. Proof of your ID. So often, a driver's license, passport, sometimes pictures of your SIN, the front and the back. That came up recently. The name of your lawyer, that's very important because basically when you are closing on the property, your mortgage broker will actually send the mortgage instructions to your lawyer so they can complete the transaction on the day of closing. So make sure they have that information as well. From there, that's pretty much it. It was a pretty extensive list, but at least now you know in advance and you can kind of write out notes and make sure that if you've got these documents, you've got them on hand. I find that it just makes my mortgage broker really happy when I can just present all this information to them and everything's up to date. It just makes things a lot, smoother, and it makes them appreciate working with me specifically. So it just, again, for building the relationship, it's what I would advise. Outside of that, I wanted to actually walk you through kind of like a mortgage qualification, a very lightweight version. So basically like I said before, it really boils down to your income, debts, and your credit. So your credit is more kind of at a certain threshold. And on top of that, probably the most important is your gross debt servicing ratios and your total debt servicing ratios. So there's actually a really awesome resource from CMHC. They have a debt service calculator. So you can just go onto this website and you can enter in your information and it'll show you where you are in that scale, basically. If it's like you get a thumbs up or if there's some work that needs to be done. CMHC is actually a great resource for understanding what you are pre-approved for, understanding your debt servicing ratios, understanding if you do have to pay a premium because you don't have the full 20% down on a property, how much you're going to be paying on that premium. It's actually a really great resource, and I do recommend that if you're just getting started, I would just tour around in there and see what's relevant for you, because I think you'll find a lot of valuable stuff there. So basically when you get in here, this is your debt service calculator, and it outlines it very cleanly for you. So just explaining the difference between GDS and TDS ratios. So your gross debt service ratio, or GDS, is basically the percentage of all of your household debts. So basically, your mortgage, probably your heating, your utilities, stuff like that will be included there. And it gives you the rate here, or the limit, the upper limit, that it can't exceed 35%. On the flip side, the TDS, or total debt service ratio, is all of your debts included, and that ratio must not exceed 42%. So basically, this is actually very easy to use. You just, I put in, kind of a random example here, but let's just say that the household income is 150 grand between two people. And let's say the monthly mortgage payment that they're trying to get is $3,000 a month. Let's say that in this case, I assumed a condo. I put the condo fees in here as well. So in a condo, your utility fees should be a little bit lower. So I put 200 for that. Your monthly property taxes at 500. And your monthly condo fee at 500. This is kind of like if you have an idea of what you're able to spend and what you're comfortable spending on a monthly basis. And then from there, there's some other things in here as well. Like there's a water rental, for example, if you wanted to play it safe, you could put an extra amount in there, like maybe $100 or so. Any credit cards, like I said before, if you have any revolving credit, you'd want to put that in here, or in your vehicle loan, or any other lines of credit. Make sure that's captured as well. And that's going to go into your total debt servicing ratio. So actually, yeah, I just noticed that these are the same percentage, because in this case, I was assuming a case where people didn't have any other debt outside of just their household expenses. So that's very clearly the way that they calculate GDS versus TDS. Let's say you've got a car and it costs you $300 a month in fees, then we could just very simply recalculate and that's going to change our TDS compared to our GDS. So you can see, and you can just kind of play around with these calculators as well, and figure out that, based on your situation right now, or maybe you're expecting to get a raise and some more income, just kind of seeing the optimal time to get into the real estate market as well. That's basically my topic for today. So I know it was a bit of a whirlwind. I will include all the links to all the documents that I covered off today, any references that you can use so that you've got like a checklist for just being prepared when you meet with your mortgage broker. But it's honestly, I find that it's actually really helpful to have all these documents on hand so that you always have an accurate snapshot of your financial picture. Just again, to help you kind of with planning with your partner as well and figuring out how you guys want to move forward. With that, I'm going to finish off the video, but thank you again as always for coming to watch us, and please leave any comments below, any feedback, good or constructive criticism is appreciated as well. Any ideas for future videos that you'd like for us to create, always appreciated. And if you did like the video, please remember to like and subscribe to the channel. And with that, guys, thank you so much and see you next time.